All right, let's get right to our first guest, kicking us off to the close, a wealth of experience, of course, from his days at the Treasury Department to Lehman to co-founding BlackRock, and then, of course, shepherding Evercore for more than a decade. Ralph Schlosstein joining us right now, Chairman Emeritus of Evercore. Pleased to have you on the show here, Ralph, on a day where I think everyone was hoping to get a little bit more insight into economic conditions, the fight against inflation, and whether the Fed really has any real case here to remain on pause.
Well, I think we got a big non-surprise today, which left everybody uncertain. But I think the real issue here is, honestly, in my view, I don't believe that another 25 basis points of hike or the lack thereof will have really that much effect on the direction of the real economy. The real question I think that we all have to ask is what effect will the 500 basis points of hiking that we've already had have on the real economy, and that of course will ultimately affect the direction of the markets themselves.
How in sync are the markets right now with the real economy? There's always sort of that catchphrase you always hear people saying that the market is not the economy and vice versa. But what is the correlation, at least from an investor's perspective?
Well, the markets are discounting or expecting a soft landing. If you look at what's happened this year, we've had a very strong rally in equity markets. However, earnings are flat. So what that means is essentially all of the gains that we've had this year are coming from multiple expansion. And that's effectively anticipating that earnings will rebound later this year and early next year, which can only happen if we have a soft landing. So for the market to stay where it is, much less to rally more, we really need that soft landing and a rebound in corporate earnings to justify the multiples that we have right now.
Yeah, Ralph, it's a real head scratcher. We're not seeing a whole lot of slack in the labour markets, not seeing very much at all, in fact, and we are seeing inflation picking up again now. How, if at all, does that turn into rate cuts of any kind next year?
Well, I'm not sure that it does, to be honest. I think that we have two powerful effects, some of which are pushing against each other in the economy right now. One is the powerful effect of 500 plus basis points of Fed increases in the Fed funds rate, which obviously will have a slowing effect on the economy, but a significant lag. The other effect is the remaining effect of the stimulus that was passed to offset COVID, which has been spent slowly by consumers, not immediately. So that has been mitigating somewhat what otherwise would have been a more powerful effect of the Fed rate increases. At some point, the stimulative effect of that stimulus package will run out. And I think there's some risk that when that happens, we'll see a more immediate and perhaps more significant effect from the Fed tightening.
Ralph, what's your outlook for M&A activity and just capital markets activity in general? I'm thinking of the RM IPO, for example, which should take place this week, and also the idea that there might be still a little bit of problem in the banking industry. We're seeing the regionals sell off a bit today.
Yeah, I think we're seeing green shoots and not immaterial green shoots in both the capital markets, the ARM offering, Instacart, et cetera. We're seeing some real meaningful IPOs coming back. And we're also seeing a real pickup in dialogue, both between strategics and on the part of private equity in the M&A markets. The impact of in the capital markets will be felt much more immediately because it doesn't take that long to gin up an IPO or a secondary offering, whereas it takes quite a bit longer for strategic discussions to come to fruition, to even announcement, and then of course it very often takes several months or quarters before they close. So in terms of the impact on the revenues of the banking business, the investment banking business, I think you'll see the pickup in equity markets and debt markets starting to be felt even in the third quarter and certainly in the fourth quarter, and M&A probably more reasonably early next year.
All right, folks are really trying to guide themselves through, I guess for a lot of folks, a very difficult market cycle. Ralph, you've seen several market cycles, and we really appreciate you taking time for us. Ralph Schlosstein there, Evercore Chairman's Emeritus.